Welcome everyone to the Kendall Report. It is Sunday night. I promised you folks that we would do some long-term analysis, but there's a problem. It's still April. So we're going to have to do that tomorrow night when I get some updated numbers from the monthly charts. And so I will touch on some things, but we'll do a full down and dirty long-term review for the coming up month. I see there's somebody named Mark here. He's saying didn't see opportunities on the short side last year or this year. Obviously, he's new here. He read some headlines on some videos. So welcome, Mark. I appreciate you coming. Anyway, yeah, folks, it's interesting. We're coming into yet another week of earnings. And really, I went through all the earnings. We have like 1,548 earnings reports coming out. There's some significant ones, but the only one that stood out was Apple that comes out on Thursday after the close. So we'll wake up to the reaction to the markets to Apple as well as employment and all that stuff. So to set up this beginning of this new month and the second month of the second quarter, let's just talk a little bit about the economics, set that up, and then I've got a couple things that I want to talk about. And I'll probably go into more detail once we get some more numbers on Monday night, once we've got some data to look at. But if we look at this week, Monday we got ISM manufacturing, still in contraction mode at 46, expected to stay there. The consumer construction spending expected down. I mentioned the other day that really what we're seeing here is on the I guess from the real estate side, we're still seeing a contraction there on the home sales. Last week, we saw a 5.4% decline. We've been seeing steady markets for a while, so they're starting maybe to be a little bit of rotation starting there. And that factory orders are due out Tuesday, expected to be up 1.1. JOLTS, the jobs openings, 9.931 was last month, so we've dropped from 11 million down to 9 million, and that's a metric that the Fed's watching very, very closely. They would like to see that number down probably around 5 or 6, maybe as low as 4, and that would make them quite happy that they're doing their job. On Wednesday, we have ADP expected 150, ISM non-manufacturing at 51.6, so that's still in a positive mode. Thursday, we have productivity coming out, which is a big number, plus 0.1. Labor costs to be up 0.3 or 3.7. So that's your inflation number still hanging around out there. And then we've got claims 242. They were down last week. Everything was the economy. I'll talk about this in a minute, but the economy just continues to do really, really well. And unemployment to come out on Friday, 195 new jobs. We're looking at 3.6%, pretty much unchanged from where we've been. So I had talked probably, if I flash back a little bit to last, I don't know, maybe 6 months ago or so, it was starting to look like we're going to get an increase in unemployment. And I was targeting around potentially 4.1, 4.2%, but I didn't see it getting much worse than that. And what's interesting is we should have already been on a path to those numbers, and we're just not getting there. Before I get into some more details, I want to review. Last week, of course, we had GDP come in softer than expected, 1.1. That was the big signal that the Fed's going to pivot and lower rates and all that. I'll go through all these details. That's not exactly what's going to be happening out there. We also had I'm just looking here at some of the other numbers that came out. We had pending home sales. This is what I was talking about, down 5.9%. So that was the one really negative out there. Let me just go ahead and just mention talk about earnings, and then I'll talk a little bit more about the economy, as this is going to be really a week that's going to be focused on the economic outlook here. But the earnings coming out, 127 on Monday. I didn't see anything significant really that's going to be jarring the markets. Tuesday, We got Pfizer and some banks. That might be interesting. 257 reports coming out. Wednesday's 427. Thursday, 574 with Apple after the close. And then we have Friday, 163. And that's a total of 1,548 earnings reports coming out. So there's going to be all of that in the background while we're really going through the employment week and all of those things going on out there. So let's talk a little bit about a couple of things. I went out and did some economic research. I was in Phoenix most of the day. I was getting back late. That's why I was a few minutes late getting started tonight. So I was down in Phoenix and trying to find the recession. I couldn't find it. Once again, all the parking lots were full. Every store I was in, there was lots of activity, and nothing's going to slow down. I had this weird thought. I was thinking, I saw something about, the Great Depression, and we had an unemployment rate of 25%. And I thought, well, geez, always loved that number. It's not that it's good, and there was a lot of ugliness, but 75% of the people were working. And so this whole scenario of how people try to paint these scenarios. Listen, for the most part, the reason why Zero Hedge website exists is most of you like to see the negative headlines, and that's much more negative than anything. Most recessions, by the way, only last 14, 18 months, something like that. So you're really looking at, I would say, the softness that we saw in 22, which we were mostly in cash. You folks know that. And we're presenting after January 1st that we would see multi-month declines as we went through the year, and then came into October. And of course, that's where the markets started to turn around, and that's where our database started to turn around and all of that. But I'm just telling you, there's no recession. There's no recession coming. I'm on record for saying that. And we're not going to see a lot of change in interest rates either. We're not going to see a Fed pivot. None of that stuff is likely to happen. And I think as we go through this week and you see the economics, the earnings reports, that's the other thing. Earnings were supposed to be imploding. And so far, look at all the FANGs and look at all the big stocks. That story was out there months and months ago. Everything was going to implode, and that, the end was coming, the sky was falling, and it's not. I had an interesting conversation with an old friend today, and I know he watches every night, but one of the things we were talking about is not only is there rotation in the stock market, but there's global rotation. I was in Singapore a week ago, a little bit over a week ago, and there's spots. We saw South Korea is really kind of imploding right now, which is interesting what's going on there. But there's rotation. There's places where things are amazing in the economy. So you see, the whole UAE and Saudi and that sector and India. There's a whole lot of activity on this planet. So far, the rotation looks very real, both in the stock market as well as in the world economy. So there's always somebody pulling on, wanting some demand, and we're still linked up pretty good. The global economy is still very much intact. As much talk as onshoring has been, it's been just that so far. There's been some movements toward that, but not a lot as we sit here right now. Most of it's just jawboning. There's not, like I said, not a lot of action. It takes a while. When I was driving down to Phoenix today, I got to drive through the Taiwan semiconductor plant they're building. This monster plant. It'll take them years, but Phoenix, Arizona in general is just expanding between electric cars and chips and all kinds of stuff. I mean, they had major highways shut down on Sunday because they're trying to do everything they can to plan for the growth that's about to happen here. So Arizona is very hot. No pun intended, we'll say. It was about 100 down there today when I was there. But the point is that there's still there's places where things are expanding. I would suspect the way things look, Arizona is going to be probably the top growing state in the country the way it's looking. It's absolutely amazing what's going on, especially when you get down into a number of places down in the valley. Even Apple has built a presence down there. Everybody's kind of there right now. So it's interesting. So I'm going to stick with my story that there's no recession coming. I think there's going to be hot and cold spots. You just got to pick them. And it's going to become even more of a stock picker's market. And that goes. I just wanted to comment on something. Somebody said, I wish we could scan for all of the, look for the indicators and look for buy signals and indicators. Well, you can get Wavetech. It's $97 a month. We have 15,700 symbols. Not only does it have all the indicators, but it has the logic that compiles everything together. So you can, I always joke that it's like karaoke with auto tune. So, you can check that out, Kendall Report / Wavetech, and find out how to get involved. That's the first of the month, as good as any to get going. Anyway, so let's go ahead and get into the database and start to unfold the beginning of this new month. So this is, I have to refresh this. Bear with me 1 second. This is not the good numbers. There we go. Okay, that was a good number. I was thinking that was the intermediate. So this is a short-term database. We're at 50.27. If you remember last week, we touched 41.97, right to that 42 marker, and we bounced back. We had 1,518 new buy signals for the open in the morning, 206 sells, and so we had a nice positive rotation over 7-to-1. You can see both of the lines here next to the sentiment there is bullish. On the weekly, it was pretty much just a rotation on the intermediate with 286 buys versus 481 sells. So slight downtick. Let me show you that number. Here it is at 65.74. We were just above, just a touch higher than that last week. And so we're still staying very, very positive, and we're still on a forward-looking basis. We're looking at the markets has at least, I mentioned this last week, I'll go through more detail tomorrow night. I'm going to try to get through the stream pretty quick tonight, just because I can't really do the long-term analysis I want to do. I'll set us up for the beginning of the week. Then tomorrow night I'll talk about the month of May and beyond. We'll go to doing quarterly analysis and all that. I need that first day of May numbers to be able to do some of these calculations. All right, we'll start with the E-mini futures on the hourly, as always. It's interesting. It looks like there's some downside here, and I'll just kind of unpack this, that we continue to struggle around this 42 handle. We got up to what, printed 97 on Friday, so we just can't get above these numbers. And now you can see here on the chart, these red dots here are Fibonacci projections right now. Low target 1, 4169, 4160, 4154. So a little bit of downside here. When I show you the dailies, it's a little bit of a mixed picture. The update after the close last week, we had some negativity being projected, but that GDP number really changed everything, at least from market sentiment standpoint. Whether the Fed pivots or not, there were a lot of buyers, and there still continues to be buyers in these charts. And like I said, the database is at 50.27. It was 42% just 2 days ago. So we rebounded on the short term. We continue to be very robust on the intermediate. Just a quick comment that those of you that are utilizing Wavetech or your PortfolioXpert, our institutional clients, just know that rotation is really walking forward this market into the probably middle to end of third quarter and maybe beyond. Is if we continue to get a rotation here on the intermediate, that's going to happen. But the short term, like I'm showing you here, has still got some resistance here. There's a lot of work to do. But when you start, I keep saying this all the time, is the markets aren't about what the indexes are doing. There's the underlying trends that are out there, and that's why I go through the database every night. And I didn't bring up the exact number, but at 60%, we're around 11,300, 400 symbols long on the intermediate database. And that just means that there are a lot of trends unfolding and a lot of forward-looking probabilities and a lot of stocks, not just a couple, and more like 11,000 of them plus. And so this all ends up equating into the indexes, but the indexes can go back and forth and we can see lots of rotation. Like I said, we have 1,548 earnings reports coming out this week. So that's really, when we come into earnings season, as I've talked about before, is that we really get a lot of this underestimation, even on purpose, or these analysts are just really bad at their jobs. This is always when I get into earnings, I talk about this every time for decades. This has been my scenario. So regardless of what the case is, most earnings seasons tend to be in the 65 plus percentile range of surprises or doing better than people were expecting them to do. And like I said, this equates into these indexes. Is what I'm really talking about here is this forward-looking expectation is built into these earnings. And if I'm right and there's no recession, then everybody else is wrong, so to speak, in that a lot of folks are positioned against the markets. And I think what we saw the other day with that GDP number was massive short covering. I saw near panic type activity when you have to understand, I am I don't know, we'll just say I'm a master at working with the order book and watching the order book, and the activity that was going on Thursday was absolutely insane. The type of action in the order book that was happening, where there were just big, giant blocks of trades coming in. So there was a lot of, like I said, near panic type activity on the buy side. And so they caught everybody pretty flat-footed. Now, markets have stabilized, and now we're going to have to work again to get through here. And we got a big week. Like I said, 1,500 symbols, companies coming out with earnings. We've got unemployment. We've got a fair amount of information coming out this week. And I think a lot of folks are, if we come in line with the employment numbers, it's getting harder and harder to call for this coming recession, but everybody's sticking through that. I didn't mention it. Maybe I'll talk a little bit. I'll save it until we get to the interest rate. So let's go ahead and take a look at the daily chart here. This is actually weekly. Let's look at the daily, and we're remaining above the 10-period moving average. And I saw somebody mention in the timeline here that we're wanting to know about the indicators, new indicators coming out. I was literally up to 3 a.m. last night working on some stuff. So we're trying to get everything ready. There's a bunch of write-ups. There's videos that need to be made and how to use them. There's a whole lot of work, and it's coming along. That's what I'm telling you. Excuse me. So as we look at the dailies, it was interesting, and this was embedded in here. I talked about this pivot line that's here, and that is at 40.94, and we got above that. We came back below it for one session and then rocketed back. But I've shown you this stuff. I don't want to go into much detail. We'll cover this tomorrow night. We're in this giant box, and we've been in this range for over a year now. It goes back to March of 22. We've not been up, we've not been down, but when you look at a lot of, especially in last year, when we look at the individual stocks, we saw some monster declines and a lot of stocks out there. And so, and the index is just rotating as one symbol after another was getting destroyed in 22. So they finally found their footing there in October. But this is, once again, starting to show a little bit of weakness. We still have these downward targets, and I mentioned they're way down here. Somebody's going to call me wrong because I'm going to mention a number, and the number is 39.58. But we still have that rising 40. If you recall, I talked about the 10-week moving average last week and the 40-day moving average. The 40-day average, we came down the other day and we got to 40.60. If you folks remember me talking about that number, came down to 40.60. The low was actually 40.6875 intraday, and we bounced off of there. We went through that green pivot line, and then we're back above all the averages again. And it looks still looking like we're going to stay in this sideways range. I keep telling you folks that's what's happening. We rebounded back to the top. Now we're probably going to try to come back in a little bit. Maybe as we come in to ADP earnings, maybe folks just start to flatten out. Maybe the whole market gets focused in on the earnings and waiting for employment and all that, and we start looking more toward the mid to the end of the week. We'll see how things trade tomorrow. But I think the activity looks like overnight we should see some movement down into those numbers I just mentioned. Before I move on, let me go over and let's bring up the market grid real quick and just take a look here. The market grid is suggesting 4206 R1. I think that's a good possibility. We could see that print today. S1 4175, the low so far 81. You could argue that we've already seen S1, and there's some potential for us to get down to S2 4158. And that's what the hourly chart is telling us, that we're going to print down to that 4160, 4158 level. And beyond that, 4140, 4125. I don't think those numbers are in play. So I'd probably argue an R1, S2 for today. I think that's a little backfilling. Folks are trying to get set up for this week and unemployment and all the other elements that are coming up. All right, as we look at the NASDAQ, we saw that same type of action. Currently, there's no upward projections on the NASDAQ. Or let me just look. No, there are. They're very tight, though. 13,173, 13,315, and 13,403. So we're looking at a very tight. We've already met some of these numbers. So it looks to me, once again, the NASDAQ looks stronger than the S&P, and I've shown you those pair charts. We continue to see the NASDAQ outperform all the other indexes, with the exception of the general trend that the mid-caps seem to be, faring just a slight better. They're still underperforming, but not as much. So mid-caps are still better from that standpoint. The fact that I mentioned when I go through Russell, I'll bring up those pairs just so we can take a look at them. But once again, we see PPM starting to accelerate. So we're still got this upward slope. It's different. If I went back to ES daily, you see the algos are kind of projecting flat to down. The NASDAQ is projecting flat to up here over the next several sessions. And you can see everything we're potentially on Tuesday could cross over to second derivative on PPM1, which would suggest that there's more upside here. So it's going to be interesting. I think this week, the NASDAQ will probably continue to be the leader here. Let me just bring up the weekly chart. You can see, and I talked about this, I know last week, is I didn't first broadcast was Monday after being out of town for over a week. But you can see the upward slope here being projected on the indicators. And the pattern that is flowing is just positive. There's no way to come up with a negative. So like I said, we do have some fib targets to the downside, but they look improbable at the moment. But you can see the weekly, it's starting to potentially flatten out weekly, but the numbers are, PPM1 is a 1.02, and the markets themselves, anything on a trend level above 0.25 is a trend. So this is 1.02, so full whole number of 1 plus. So this is a robust trend, and even if we start to go out a couple of weeks, it's still at 0.5 plus, which tells you that upward angle of attack is still positive. So it's very, very difficult to get very negative. And there's still, I would generalize here just a bit, is that there is an upward bias on a slight upward bias on all these markets. And they just don't want to go down. The employment, economy, all these numbers just continue to be mixed in some areas and very positive in others. And like I said, my view of the economy earlier today and was things are really crazy busy out there. And I went by some random parking lots because there's so much I mentioned going on in Arizona that they literally shut down I-17. I had to do this huge circle around that area through the desert to get back up in the mountains here today. It took an extra 45 minutes or so. But the point is that everything is just exploding, and I know there's other areas in the country that are doing similar things, but the markets are just way too positive. And Abbey Road, thanks a lot for that huge super chat. I just tell you, I just wish you'd buy our product so you can do it. Maybe you already have, and maybe that's an extra tip. But thank you so much. I appreciate it. That's a great comment, and very, very nice. Very nice way to show your gratitude. Appreciate it. So let's go ahead and let's take this is a weekly. Let's go ahead on to the Russell, see if we can get through this stuff. All right, folks, I'm going to change some factors here. Those of you who have the indicator, I'm going to set the algos to 50 on this. I just want to see what's going on. I just need to change a couple of numbers here. So you can change these variables. So the look back, the coefficients aren't as long, and then we'll get some numbers here. I just want to see how this looks. In the past, I've not taken the time out to do this. So one last indicator, and then we'll be set to go. So this is interesting because what we're seeing here is this configuration. We had some Fibonacci targets. Now this is a weekly chart we're looking at, and the weekly targets, the downward fib target 3 was 1721, and the low was 1731.70. And we're trading right now at 72. So this downward slope here in the 10-period moving average is still looking like it's going to maintain. It's down 1.14, so it's still a negative push on the downside. If we hold this lower fib number down here, we'll just say if we hold last week's low, make it easy, and we can get back above the 10-period moving average, 1791. Then we got a chance to trade into these averages and start to build on this stuff. All of the algos are suggesting complete flat environment. So it looks like, and I told you I'll show you the pairs. I will here in just a second, but it looks like we're not there yet. I keep arguing about the pairs and that the Russell is going to start to outperform. The big issue with the Russell is it's got a lot of these regional and community banks in that index, and it's weighing heavily. But there are some crazy good ideas in that small cap area. And one of the things that we provide if you are a Wavetech user is what you get is we have on our PortfolioXpert website, we have basically institutional grade screens that we put out to, and these are the same screens that we put out to our institutional accounts, just so you can see what's out there. And if you go through some of these small cap and some of these small cap growth numbers, there's some really good trades out there. If you look at the index, it looks like crud, but if you start to go behind the scenes a little bit, there's some amazing ideas. And I still think that we're going to see some further positive rotation. And the index may not be the best way to look at that. And if you do have Wavetech, then you can see what's going on there in that back rotation there. But so let's take a quick look at the pairs here, just so we can get an idea for that. And I think these are over here. The Russell, you can see it's versus NASDAQ is down. These are weekly charts here. I'll blow this up full screen so you can see it. You can see how it's coming down. It's getting close to this base down here where it came out back in over a year ago, and January of 22, we're down to that level again. We're still not seeing a turnaround just yet, and we've got a lot of work to do. You can see if we go all the way back here to 17, the Russell has been underperforming forever, and it's sort of like maybe this is in correlation with the decline in M2. I don't know, but we're starting. But the point is that these stocks have been out of favor for a very, very long time. And I think if there is going to be a positive rotation from market viewpoint, is that we're going to need these stocks to act a lot better. And with the bank stocks in here, I don't know if this index is going to be the best place to look. I'll see if we can find an ETF hack that we could go in and maybe dig into an ETF and find a better set of stocks to follow, because this overall, I mean, looking at it from index level, it's really not very good. But it does, let's face it, a lot of these banks are printing values that they're probably very close to the lows. I mentioned that, First Republic is likely, we're waiting for the state regulators to show up and with the keys and lock the door and then call the FDIC. I mean, that thing is all but done. I did a tweet the other day showing that our algos were projecting minus $200, and somebody said, how can it go under zero? And the point is that it can't. What it's saying is this thing is done. And we had similar type projections if we went back to 2008 with WAMU and a bunch of them were giving negative stuff, even Bank of America at one stage. And, Lehman was on that list. But the point is that when those kind of patterns emerge, I call them death patterns. And there's still other banks that have issues. I just tie this together with the Russell and the spread. There are other banks that still have issues. I don't say it's going into systemic. I just saw a tweet a couple hours ago, and some guy's going, this is worse than '08. No, it's not. Okay, it is not. And I know they're talking about liquidity crunch. No, it's just, listen, the Fed is, if they had to do, they've already opened up the discount window. So basically, anybody that has liquidity issues can fix it with one phone call, so to speak. They don't actually make a phone call, but you get what my reference. And so all that's off the table. So anybody that is promoting that doesn't know much about the banking system or has some other agenda they're putting out. All right, so we'll go to the 10-year. Probably good. We're here at the weekly. We continue to just be range bound. There's something on here I noticed I didn't have on here. Let's put this down. Let's put the market grid on here. I was doing some work this weekend trying to clean up these charts. But you can see the market grid here on the 10-year is telling us that we've got these projected ranges. The range, this is weekly, the entire volatility range being projected right now is 336, high 377, okay? So, and then we look at the moving averages, they're all declining. We got monster resistance at 350, 357. That's not going away, so we'll call it 360. And on the downside, we're probably looking at 346, 340 range as the downside. We should stay in there. It's interesting to look because about 2 or 3 weeks out, it looks like we're going to start to stabilize. From a yield standpoint, we'll start to move higher. So let's take a quick look here at, let's look at the 2-year, and I've talked about this before. Let me just see if this is fully, yeah. So this, the algos are suggesting, you can see the projection for the SMAs are still down. So we still have a generally downtrend in rates. So whether that's some of these other banks or they're able to generate some type of rhetoric around here that keeps rates down, that might be the case. You know, you have to look at one of the things that I would mention here. If you look at how the banks are situated and look at what's happened with the Treasury, especially in the back end, some of the 5 and 10-year levels are really have pulled back into this 3 handle. I don't see them getting into 2, but I think they stay in the 3 handle for a while. Maybe we start to see some increase. We'll see what type of activity we start to get as we come into, get through May and come into June and get into the dog days of summer and see what kind of things are going on there. So I would just suspect and continue to see this rate structure stay really flat. Sometime in the next, whether it's this week or next week, we'll just do it by demand. I'll go through and we'll talk yield curve one day and dig into what the probabilities are here. But I continue to see, folks that are promoting some kind of bank crisis. They're just wrong. There aren't thousands of banks. There are thousands of banks that have funny looking stuff on their balance sheet. But if you were to look last year, 2 years ago, 3 years ago, banks are a funny thing. They, depending when you look and how you look, is what your opinion is to be. And right now, we had this whole scenario that they had uninsured assets on the books. Well, they've always been mostly uninsured. Even they're not ever all insured. You're not going to find a bank, and what would be the point? I guess maybe if you want that, go to Treasury Direct and open an account. Okay, those are guaranteed. But any of the banks have different business models, and there's just there's thousands. I think roughly 4,200 plus banks out there, and they all have different business models. They do different things. They have different types of customers. You can't generalize the banking system like is being done out there. That's my opinion. And I'm sure if I'll just call out Dr. Baker, he'll call me and tell me if I'm wrong, and I want him to do that. But I think this is exactly what we're seeing here as these just a stable rate structure going forward. And like I said, one night I'll do some yield curve stuff. I want to get through tomorrow night, really get into long-term understanding, looking at how Q2 is going and start to look forward. Now we're seeing a little bit more of Q2. We'll start to be able to get forward on looking into, maybe a little glimpse of expectations coming into Q3. Anyway, I see you, the Smurfs talking amongst yourself. I just happened to look over some of the comments. Yeah, anyway. Yeah, thank you, folks. I appreciate it. But here we go. Let's talk about crude. Crude is still in that sideways mode, and this is a weekly chart. Let me just blow this up a little bit so we can get a little better view of it. We do have some upward fib targets, but we're going to be limited to this downward slope 21. We're looking at 80.97. I've talked about the 84.71 is still out there from the standpoint of some of these fib targets that are embedded in this pattern. Let me blow this up so you can see it a little better. Is that we've got, you can see we're getting sandwiched, and this is what I've been talking about. We're getting sandwiched between the 10 and the 40 moving averages. We look at the algos, they're stable to up. So that looks like the expectation just to stay in this range. We should stay under the 40. That number right now, like I said, 80, we'll call it 81 bucks. But we should trade between these levels here, 76, 81. That's probably your range there. And it just looks like we're stuck. And if we look at this pattern in general, we've been really going sideways for a while. It'd be interesting to see if we can get any of the, I guess, oil people to come out and start to talk about oil production and demand, because it looks like there's a fair amount of oil out there and demand is stable, but we saw OPEC cut back, right? We did the big cutbacks. So maybe they saw demand, or maybe they're just trying to squeeze the market a little bit, get a little more juice out of what they are selling. In the end, if they sell less, but it's at a higher price, because that price went up from around, I want to say we were around 70 and we bumped up to 80, 78, 80. Now we've stabilized here again, but we just had that little dip, and that's when they did their cuts, and they're stabilizing the market. And we look in general, if we look back all the way to October of last year, we've really been in this range. It kind of bounces around, up around the higher 90 level, 92, and then we printed down here recently. We did print down to 60, 65, roughly 64.36. So there's just nothing here really to get excited about, except for there's a general sideways with a slight bias to the upside in crude oil. So I don't see any surprises coming here. As soon as you say something like that, there's a surprise. But it looks like from what the patterns are suggesting, it's just more of the same. All right, so we'll do gold. Let's stick with the weekly charts here. And I've been talking about this for a while. It looks like sometime in the next week or so, we're going to get some pretty negative push here. And like I said, unfortunately, Peter Schiff was bullish again here, so we're going to see it come back down. We didn't really see the market grid on a weekly turn down. Possibly next week, but if you look at the algos here, they're getting very negative. And it looks like somewhere around mid-May is where the rollover is likely to happen. We're starting to print down towards this 10-period moving average. That's 1968. There's an old number that I talked about for a while, 1965. That's pretty good support there. I still think we get some more consolidation, but it looks like ultimately I'm expecting a print down toward the 21-week moving average, which is going to put us down around 19, 20, 25, down in that range. Looks like where we're going. I'll go ahead and bring up just a monthly chart real quick here. I showed this the other day. We're right on the first fib target, 2019. We got right into that range. We got all the way up to 2063. That mid target was 2172. So we sort of kind of solved that. We still have upward bias on the monthly, but the support on the monthly is down, way down. 1840 is the extreme support in this market. So my expectation is, like I said, probably somewhere between 1940 and 1925 is the setup to decline into there. It doesn't look like there's a lot of immediate upside from that standpoint. Yeah, I had a run-in with Peter. That's why I always use him. I'll leave our personal conversation alone. But the bottom line is gold looks like we've got a little bit of downside. Yeah, we'll cover Bitcoin. I'm going to stick with this monthly chart here. And kind of interesting because I haven't looked at this, and there's something floating out here. The Bitcoin people will love this because we've got monster projections, Fibonacci projections here of 58, 71, 80. And I remember going way back when we were getting these 68 handle stuff at one stage. But it looks like this first projection would be kind of a move up here to 58.60 again. But I got to look at these numbers. Yeah, there's not enough data here for me to run the algos. So let's go to the weekly and come down to earth a little bit. But that was kind of an interesting pattern that the algos have picked up on, the pattern recognition tool has picked up on. And we look here at the weekly, and I've been talking about this for weeks. This whole upward, as we went sideways here, we now get, and I talked about this the other day, when we get here on Sunday night, will the market grid turn up? And the answer is yes, it did. The high last week, if we look at that, the market grid, 30,177, 30,022 was the high. So we just about hit the RTX here. As we come into this week now, we're looking, I know it's really small on the side over here on the right-hand side. So if you have a big screen, you can probably see it. But the R1 is 29.62. And let me just, I have to kind of slide up to see. So we're at 29,344 right now. Just want to bring that. So the R2, 30,775. So probably an R2 that would retest the highs of last week, maybe R3, which puts us up here at the RXT, or R2, excuse me, is 30,775, R3, 31,588. So that would be a new high. But the important thing to watch here is that this upward slope here is still positive, and it just now crossed over its first derivative, but it hasn't got to the second, and it's projected out. Here's another mid-month or mid-May number that's coming out that suggests that's where we might start to see a rollover and a penetration of that 10-period moving average. But I think the SMA 10 is going to hold pretty well here as a support level. Let's go ahead and go down to the daily configuration. This is a little bit interest. So we got, from this standpoint, we're printing down here into this. We do have some new fib targets here on the daily. This is 20, 25, 968, 24, 419, 23, 463. Let me go back to weekly for a second here. I just want to see The STX weekly, the 10, I just want to tie this stuff together, 27,302, and then we're looking at the STX weekly is 26,156. I'm going back to the daily chart here. So you can see this number here, 20, this downward target would be STX weekly. So that number right there is, that low target one is 25,968, but that STX number would be in line with that. And you see, we still have a little positive slope on a 10 we should hold, but it looks like in a couple of days we could start to see maybe movement down toward these numbers. And one of the things that I've talked quite a bit to you folks about is what you want to see here from the standpoint of when you look at the market grid, you'll see that it is narrowing down. Volatility is collapsing on a daily basis. And typically when it collapses really tight, it's a downward movement rather than an upward movement. I don't know why the contraction or there's when it does this, it usually suggests that we're going to see some of the numbers to the downside. The algos look like that's the case. PPM2 is negative, PPM3 is negative right now from a formation standpoint. But right now, PPM1 and 2 and 3, their values are 0.49, which is trend mode. So we're sitting right on that number right now, which is 28,560. So we're trading right into support right now. So like I said, I still think we climb along this line, but if we can break down in the next couple of days, look for these Fibonacci's to hang in there. Okay, folks, that is it. Just looking at looking at some of your comments. I wish I had time to just really read these. That would be kind of cool to have a mod, like we do a Q&A and somebody read them off to me so I don't have to try to read and search what's good, that somebody could do that. Maybe we'll figure out how to do that someday. That would be kind of cool to do. Anyway, folks, new week, new month. Should be interesting. I think there's a lot of things in May that will start to reveal themselves in a more positive way. I would say on a general sense, I'm still bullish on this market. We're still sideways from the trend, but from the short-term, intermediate trends are still positive to up, but there's no big upside. So what I'll do tomorrow night, I promise you, we'll have all these numbers. We'll bring up the quarterly. We'll do a whole big top-down look at the world, going from quarterly, monthly, down to daily, and I'll break down the whole thing. So as always, thank you for watching. Thank you for subscribing. Hit the like button before you go. Really appreciate it. And we'll see you tomorrow night, same time. Have a great day trading, folks. Hey, Jorge, I did forget to mention the Fed meeting. I think. Anyway, we'll talk about it tomorrow. You're welcome, everyone. I love watching you guys chat after the show. Thanks a lot. Hit the like button. See you later.